All right, so today we're going to be taking a deep dive into India's capital markets. We've got this article from the Indian Express, and it's painting a pretty interesting picture of what's happening over there.
Yeah, it seems like things are really heating up. They're predicting this massive surge in fundraising for the coming fiscal year.
That's right. It's hit something like a 21% jump,
Yeah.
reaching almost 15 lakh crore in 2025. And that's a pretty significant amount of money. So whether you're, an investor yourself, or maybe an entrepreneur, or even just someone who likes to keep an eye on the global economy, I think this is something that you should definitely be paying attention to.
Absolutely. India's economy has been on the rise for a while now, but this kind of growth in the capital markets is really, it's a pretty strong indicator of what's to come.
Yeah, so let's break down what's actually driving this surge. The article mentions SEBI chief Madhabi Puri Buch, attributing it to several factors. Is it just a simple case of, India's economy doing well? Or are there other forces at play here?
I think it's definitely a combination of things. Yes, India's economy is performing well, but you also have to consider the increased investor confidence we're seeing,
Mm,
both domestically and from foreign investors.
right, and we can't forget about the government initiatives and policies that are specifically aimed at fostering business growth,
Absolutely. Those are playing a key role as well.
especially in sectors like infrastructure and manufacturing.
Exactly.
Now, the article goes on to break down how all this money is actually being raised. And it's interesting because of the 10.7 lakh crore already raised
Hmm.
in the first 9 months of fiscal year 2025, a large portion of that 7.3 lakh crore is debt.
Oh, wow. That's a pretty significant chunk.
Yeah, only 3.3 lakh crore has come from equity, although they are predicting another euro 1 lakh crore in equity by March 2025. So I'm curious, when you look at that kind of debt to equity ratio, does that raise any red flags for you?
It's definitely something to keep an eye on.
Right.
On the one hand, I think this high level of debt financing could indicate that companies are really confident in future growth and they're willing to leverage themselves to capitalize on the opportunities that are out there.
Right.
But on the other hand, it does raise concerns about potential overextension, especially if, economic conditions were to take a downturn or if interest rates were to climb.
Yeah, it's a bit of a balancing act, it seems.
Yeah.
And it's not just the big players that are raising capital. The article also highlighted that the time it takes for smaller companies to do a rights issue,
Right.
which is where they offer existing shareholders the chance to buy more stock,
Yeah.
that's been drastically reduced.
Yeah, that's a huge development. I mean, it used to take forever.
317 days to be exact.
Wow.
And now SEBI has managed to cut that down to just 26 days.
That's incredible. That's a real game changer for smaller companies that are looking to grow.
Exactly. Now they have this faster and more efficient access to capital. And that could really be a catalyst for innovation and expansion.
Mm-hmm.
So it seems like India is making a concerted effort to create a more dynamic and accessible capital market. And it's not just about traditional stocks either. The article mentions these things called InvETs and REITs, although their fundraising numbers are still pretty small compared to the overall market.
Right.
Now, for someone who might not be familiar with these, can you kind of unpack what they are and why they might be appealing to investors?
Sure. So InvETs stand for Infrastructure Investment Trusts, and REITs are real estate investment trusts. And essentially what they do is they allow investors to buy into specific sectors like, infrastructure or real estate without having to invest in individual companies.
So instead of betting on a specific company, you're betting on a tangible asset, a piece of the physical economy, so to speak.
Exactly. Imagine owning a tiny piece of a highway or a shopping mall. That's essentially what InvETs and REITs offer.
Interesting. And what do you think the potential is for these investment vehicles in the Indian market? Do you see them becoming major players?
They definitely have the potential, especially as India continues to develop its infrastructure at this rapid pace. And as their urban areas expand, the demand for investment in these sectors is only going to increase. And InvETs and REITs offer a relatively accessible way for investors to participate in that growth story.
Right. So there's a way to tap into India's growth in a more concrete way.
Exactly. And they can also provide diversification and potentially stable returns, which can be attractive to both individual and institutional investors.
Interesting. It's fascinating stuff. And, we've talked about stocks and these alternative investments. But the article also touches on the bond market. It mentions that it contributes almost 63rd of every euro that banks lend to businesses. It's a pretty sizable chunk of financing. So can you shed some light on why the bond market is so crucial and how it compares to traditional bank loans?
Yeah, definitely. So bonds are essentially debt securities, where investors are lending money to a company or a government for a certain fixed period at a predetermined interest rate. And while bank loans are usually used for shorter term needs, the bond market allows for larger scale and longer term financing, which can be vital for things like infrastructure development.
Right. So for those big long-term projects,
Yeah.
bonds provide a way to raise the necessary capital. But for the average person out there who might not be, personally investing in these massive infrastructure projects, why should they care about the bond market?
That's a good question, and there's definitely a reason. Think about things like your retirement savings or pension funds. These institutions often invest heavily in bonds because they offer a relatively stable and predictable return, which helps to balance out, riskier assets like stocks.
So you're saying the performance of the bond market can actually have a direct impact on people's future financial security.
Exactly. It's all connected.
That's a really good point.
Mm-hmm.
Bonds might not be as exciting as stocks or some of these other investments, but they play a really critical role in the overall financial ecosystem.
Absolutely.
And speaking of stability, the article brings up another interesting player here. These domestic institutional investors, or DIIs, they've been a stabilizing force in the Indian market, especially given all the fluctuations you see with foreign investment. So who exactly are these DIIs, and why are they so important?
So DIIs are essentially large India investors. Think of things like mutual funds, insurance companies, and pension funds. And what makes them so crucial is that they have this vested interest in the long-term success of the Indian economy.
They're not just in it for the quick buck.
Right. They tend to ride out the short-term market volatility, and they provide a sense of stability, which can be especially important in, emerging markets like India, which can sometimes be more susceptible to sudden capital flight.
Right, so they're kind of like an anchor,
Yeah.
helping to keep the ship steady during those rough seas.
Exactly. A good analogy.
Now, it makes me wonder, is this concept of DIIs unique to India? Or do other countries have these kinds of stabilizing institutions in their markets as well?
You'll find variations of them in most major economies. I mean, in the U.S., for example, you have large pension funds and institutional investors like BlackRock that exert a significant influence on the market. Their actions and their investment decisions can really move markets, and they often act as a counterbalance to those more speculative investors.
So it's not just an Indian thing, this idea of these large domestically based investors playing this stabilizing role.
Right, it's a global phenomenon.
Interesting. Well, let's bring it back to India for a moment, because from what we've discussed so far, it seems like their capital market is really firing on all cylinders. You've got this record fundraising, a mix of debt and equity, the emergence of alternative investments like invites and REITs, a strong bond market, and these DIs providing some stability. But is there anything about this seemingly positive picture that makes you pause at all? Any potential risks or concerns that we should be aware of?
Well, there are always risks, especially in a market that's experiencing such rapid growth. And one concern I have is the potential for overheating. If too much capital flows into the market too quickly, it can inflate asset prices and create these bubbles. And when those bubbles burst, the consequences can be pretty severe.
Yeah, bubbles bursting are rarely a pretty sight. Are there any other red flags that we should be watching for? What about the role of regulators, like SEBI, in making sure that the market is stable and fair?
Well, that's a critical point. SEBI has a pretty strong track record so far, but keeping pace with a market that's as dynamic and as evolving as India's, that's a constant challenge for them. They need to ensure that investor protections are really robust and that the market remains transparent. Lack of transparency or, kind of lax regulation, that can really erode trust. And it creates opportunities for manipulation, which can ultimately destabilize the entire system.
Yeah, transparency and a level playing field are essential, especially in a market with so many different players, with varying sizes and different investment goals. But we also have to think about all those external factors. How vulnerable is the Indian capital market to global events and economic headwinds?
Well, no market is an island. Things like global recessions, geopolitical instability, or even just shifts in investor sentiment, those can definitely have ripple effects on the Indian market, for example. If there's a sudden aversion to risk in global markets, that could lead to capital flight from emerging markets like India, which could potentially impact liquidity and asset prices.
Right. So despite all the positive developments we've talked about, investors still need to be aware that the Indian market is part of this larger, interconnected global system. Well, I think we've covered a lot of ground here today. But before we wrap things up, what would you say is the most important takeaway for our listeners from all of this? What really stood out to you from this deep dive into the Indian capital market?
I think the key takeaway here is that the Indian capital market, it's this dynamic force with really immense potential. It's playing a crucial role in India's economic transformation, and it's presenting some really interesting opportunities for investors. But like we've talked about, it's not without its risks. Navigating this market requires a very careful understanding of both the opportunities and the potential pitfalls.
Right, it's kind of like a high-performance engine. You need the right fuel and careful handling to make sure it runs smoothly. But even if everything runs perfectly, we've talked about the potential for overheating, the need for regulatory vigilance, the impact of global events. But even if we've set all that aside, this influx of capital, it has to actually reach the businesses and the projects that need it the most. Do you ever worry that instead of driving real economic growth, this capital might just end up fueling speculation and widening the gap between, the haves and the have-nots?
That's a really important point. It's not just about the quantity of capital, it's also about its distribution and how effectively it's channeled towards those productive investments. There's always a risk that a surge in capital could lead to speculative bubbles in certain sectors, while other critical areas, like small businesses
or rural development,
might get overlooked. So policymakers and regulators, they have a really crucial role to play in all of this. They need to make sure that capital is allocated efficiently and that the benefits of economic growth are shared more broadly.
So even with a booming capital market, achieving that inclusive and sustainable economic growth, that requires careful planning and targeted policies. It's a good reminder that economics, at the end of the day, is really about people and their well-being.
Couldn't agree more.
Well, we've covered a lot of ground in this deep dive, but it feels like we've only scratched the surface of what's happening in the Indian capital market. So for our listeners out there who are now, eager to learn more, what would you say to them?
I would say delve deeper into the areas that piqued your interests. Whether it's understanding those intricacies of InvITs and REITs, or exploring the role of DIIs, or maybe analyzing the impact of those global events on the Indian market. There's a wealth of information out there. It's just waiting to be explored.
And maybe most importantly, don't just focus on the numbers. Think about the bigger picture, the human stories behind those investments. And how this, financial engine can be harnessed to create a more prosperous and equitable future for India.
Well said.
That's a great note to end on. Always a pleasure diving into these complex topics with you.
Likewise.
And to our listeners, thank you for joining us on this deep dive. We hope you found it informative and engaging. Until next time, keep exploring, keep learning, and keep asking those tough questions.